Good evening and welcome back to Be Rich. Markets have been on a tear for last 2 days. After the markets opened for the new quarter, the markets have rallied by 5.7%. But still markets are in bear territory and this is a bear market rally. Markets are rallying on a hope and on a prayer. This is because number of job openings have come down dramatically and it is hoped that the Fed will stop raising rates and pivot. The market is also talking about a possible financial stability with the capital hole in Credit Suisse Bank. They're also talking about the possibility of a market accident if the Fed continues on this path. And the hope is that the Fed would relent, and this is why the markets have rallied. Prices of gold, Bitcoin also rallied. But what the market did not see is what is happening today in Austria, Vienna. OPEC Plus, a group of exporting countries, are now ganging up to announce deep price cuts. They feel that the $80 per barrel is too low and the prices need to be higher at $90 a barrel. Or even before this cut was announced, the price of oil, Brent, had shot up to $91 a barrel. Russia is a supporter of this. So what is now happening is for a strange combination where Russia, and not an ally of US or an arch enemy of the West today, if one goes by what Putin is saying, and Saudi Arabia, which has been a long-term ally of the West and America, ganging up together. In spite of Joe Biden meeting the Crown Prince of Saudi Arabia in Jeddah and MBS promising to make sure that more supplies would be augmented, Saudis are now moving towards cutting supply. This is because they feel that they are not getting enough for a barrel of oil. And so the price drop during this summer hurt Saudi Arabia and other oil exporting countries. Therefore, they are now looking at a cut of anywhere between 1 million to 2 million barrels a day so that prices of gasoline can go up. The very fact that there is a meeting in Vienna and all ministers have been summoned to that meeting from members of OPEC Plus has meant that the crude price has rallied by 8% and was trading at $91 as I speak. This is a big rally in the price of crude. This is a direct conflict between the world's largest producer of oil, Saudi Arabia, and the world's largest consumer of oil, the United States. But however, unlike in previous conflicts, US is not a major importer of fuel anymore. America produces most of the fuel it requires and therefore is not an importer of fuel but rather a net exporter of crude. Therefore, America is now very clear that it wants to bring down the cost of fuel so that it can have a benign influence on inflation. Therefore, what the Biden administration is saying is that they will restrict exports of crude from the United States or also refined products. This is unthinkable that a mecca of free capitalism announces restrictive policies. Experts have warned Joe Biden administration any effort to administer exports and stop it would mean higher prices in crude and other allied products globally, and that would finally seep into America. Therefore, thus, they are warning against this policy by Joe Biden. But Saudi Arabia, in spite of several shuttle diplomacies taking place, is not willing to blink. It wants a higher price for its crude and will not stop at anything. The Americans seem to have lost any leverage they had with the Saudis. So, if the proposed cut goes through today, you will find crude trading at very high prices. In fact, JP Morgan says that crude could touch $100 a barrel. Joe Biden is now talking to the American industry and asking them to increase the production of fracking so that shale oil can be used to compensate for any lack of supplies from Saudi and its other sources. The problem is not so much for America as it is for the others. For the other currencies, the dollar has strengthened quite a bit and is already made imports unprofitable. And thus, what will happen? Any increases in price of crude will become unpalatable for most of these countries. They can't simply buy the fuel they require. The United States and Europe are now trying to put a price cap on Russian oil. Russia is today selling oil at a huge discount to the market price. It is refiners in countries like India which are raking in much of the profits. The government has also withdrawn the extra taxes it has put on windfall profits. American and European efforts to put a price cap on the discount that the Russians can give will fall flat. Saudi Arabia believes that such a price cap will affect the overall price of oil, and all the oil exporting countries will be affected. Thus, there is going to be a war of nerves between Saudi Arabia and the United States. In fact, there may also be a tit for tat response from America. But Saudi seems to be ready to accept it and swallow it. So, oil importing countries will be under enormous pressure, and any gains made in inflation in America could vanish if the decision is made today. Along with that is the news that the Federal Reserve governors, seven of them, met with small business owners 3 days after the rate hike was announced. What they found out would not give them any room to think of cutting interest rates or even pausing. Several businesses have told them that even if they recruit people, most of them are not turning up. A plastic producer told the governors that of the 14 people she recruited, only three turned up, with one quitting before lunch. Several restaurant owners have said that they are finding it very difficult to manage with high price of rent and higher cost of labor because labor is not turning up and they are not able to meet, they are able to survive because of the huge cash in the system and they are able to make do and meet with ends. Thus, whatever the Fed is hearing from the market is that there are too many jobs and too less applications. Thus, a fall in number of jobs is not a clear indicator because even for number of jobs that have been offered, the number of people willing to take those jobs has also declined. Thus, America's wage inflation has shot up by 7% this year. If wages inflation is 7% this year, then price expectations for the next year will be set higher. There is only one way interest rates can go up in the United States, and that is up. The market celebration is premature. Thank you for watching Be Rich. If you like this content, hit the like button and press the subscribe button of my channel. Turn on the bell notification. If you do not turn on the bell notification, you will not be notified every time we put out a video. Once again, I thank you for your support for Be Rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written two books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.